Hello traders, welcome to the new weekly forecast for the trading week beginning on 16th of September. What an interesting week it was. Gold has finally reached 2570, the price target which I've said multiple times in all my previous weekly videos. Now what's next? In the coming week, we have three major central banks coming with their interest rate announcements. So number one is going to be US Federal Reserve, followed by Bank of England, and finally Bank of Japan. So let's dive deep into the charts and find out whether it's still good to hold your gold trades or is it time to switch to sell. Apart from that, I'll be covering some major Forex instruments and also Nasdaq. So stay tuned and let's find out the new tradable opportunities. So let's start the week as usual with dollar index. So I'm switching to dollar index chart. I'm going to monthly frame and I need to realign my charts. Give me a second. And here. So here I'm going to clean all the existing drawings, and based on monthly time frame, I'm going to explain the structure, the technical chart pattern. So here I have used extensively in my today's video trend lines. So I'm going to connect the trend lines based on turning point. So starting point, then we got a new higher low turning point, again a new higher low turning point, and turning point. I'm going to apply a rising trend line here, starting from the lowest and connecting to the latest bullish turning point. Done. And now I'm going to move to the next lower time frame, that is weekly. Now on the basis of weekly time frame, and here I am, yes, I'm going to apply Fib extension in the downward direction, starting from the highest point, connecting to the lowest and lower high formed. Let it be red as it's bearish, and I'm going to apply Fib retracement starting from the lowest point touching the long-term rising trend line and joining with the highest point. Now we have got a confluence of Fib levels around 98.01 to 98.81. So this is the ultimate target for dollar index. Now let's move to daily frame. Now on the basis of daily frame, I'm going to apply a falling trend line as the trend is bearish here. So I'll be using the highest point. I have to zoom out a bit. So I'll be using the highest point and I'll be connecting with the lower high from where the bearish last leg has started. So starting from the highest and joining with the lowest, higher low. Again, it has to be red as it's a resistance trend line. Now I'm going to apply one more Fib extension in the downward direction. So we have taken the first bearish cycle. Now I'm going to add Fib extension on the next bearish cycle here. Connecting one more time with the high, low, and the next lower high. Okay. Now, interestingly, the next important level is the psychological mark of 100. Dollar bounced a bit without touching the psychological level of 100. In fact, it bounced from 100.5, and now I'm expecting that dollar should reach the psychological mark of 100. Now, the main thing is what is going to happen after the interest rates would be dropped by Federal Reserve. Is it going to bounce up or continue its bearish journey? So I believe we need to monitor very closely the psychological mark of 100. So let's put an alert here at 100 level. I'm going to add alert and let's monitor. So important support. Done. Any which ways, the pattern is still bearish. So here we have continuous lower highs and lower lows being formed. So starting here, then we got next turning point, lower high, lower high, lower high, lower high, and the next lower high in conjunction with low, lower low, lower low, and lower low. No bullish divergence formed yet. In fact, we got hidden bearish, which means continuation in the bearish direction. So I'll be expecting dollar index to continue lower until we see a new bullish divergence here. So most likely, I'm just going to draw the pattern here. Give me a second here. Yes. So most likely, oops. Okay. So most likely, first leg down, corrective up, third wave down, fourth up. So this is how it should complete its new downward journey with a new lower low and bullish divergence being completed. Then we can expect some bounce in the dollar index. So I have the opportunity to apply a few more extension levels in the downward direction on the latest bearish wave. First and second completed here. I have to change the color to distinguish, to differentiate. So it has reached 200%. The next is 2.61. So most likely it is going to complete its downward leg. All right, somewhere near 98. So dollar index remains bearish. Now it's time to check the next currency pair, the next instrument, that is Australian dollar versus Japanese yen. I'll start from the weekly here. Remove all the existing tracks. So again, on the basis of turning points and lows and highs, I'm going to mark the lower, all bullish turning points here. Bullish. So this is the starting point. Then we got a new turning point in the bullish direction. Again, a new turning point in the bullish direction. And this is the latest turning point in the bullish direction. So I'm going to apply a rising trend line here. Starting from the lowest. And if you notice, AUDJPY has breached the rising trend line and long-term rising trend has been now changed. And it has come into effect after massive bearish divergence here, coming together on MACD lines and MACD histogram. I need to mark the BS level on the basis of weekly bearish divergence, which is still far off. So 86.55 is the BS level on the weekly frame. Now I'm moving to daily. Now on the basis of daily frame, if you notice, we got perfect break of the rising trend line and exact retest, and now it is continuing in the lower direction. I'm going to use fib extension in the downward direction, starting from the highest, joining with the first low and then connecting to the lower high. Need to be read as it's bearish. So the next price level for AUDJPY is 90. Again, a psychological mark. Everything looks good for the sellers right now. No signs against. Moving down to 4-hourly chart. Now on the 4-hourly chart, we formed a new bearish divergence followed by break of structure and the continuation in the downward direction with bearish price pattern. So I can see here high, lower high, lower high, strong resistance, lower high. A bullish divergence was formed here, but the buyers could not break above the structure level, the BOS level, and the continuation in the downward direction is still there. Okay, now the invalidation for the selling plan would be in case it breaches above on the lower time frame, that is 1-hourly chart, above 95.65. So mainly the trend is bearish. In case the buyers come back and they take the price higher than 95.65 on the hourly chart basis, it should be taken as short-term invalidation. Ultimately, I'll be interested in selling the rise. So sell on the rise. Now the next currency pair is pound versus US dollar. Now in the coming week, we have interest rate announcement from Bank of England and dollar remains weak. So I think pound should strengthen in comparison to US dollar. Yes, now we are on the weekly frame here. Now on the basis of weekly frame, again I'm going to join the bullish points, starting point of the bullish structure. Then we got next bullish turning point here, and everything looks good for the buyers. Now I'm moving quickly to weekly. Now here on the weekly chart basis, I'm going to mark the structure again. So starting from the lowest point, then we got bullish turning point, the next bullish turning point, and the latest bullish turning point. So I'm going to join from the lowest point, a rising trend line here. So the trend remains bullish because the rising trend line is intact. The sellers have not breached it. In fact, we have got the continuation because we have higher high pattern on the price chart all around, and with no divergence at the moment. So no signs against for the buyers. Moving now to daily chart. Now on the daily chart, the latest touch point on the rising trend line is here. We've got higher high pattern on the price chart and higher high pattern on MACD histogram plus MACD lines, which means the buyers should continue. I'm going to apply a fib retracement on the latest low point, touching the rising trend line and connecting to the latest high. Currently, pound dollar has corrected around 38% on this bullish leg. We can expect a bit more continuation in the downward direction on the basis of the falling trend line. So this falling trend line is formed by joining the highs and the lower highs. Let it be read as it's a resistance trend line. Now if buyers need to come back, they have to breach the rising trend line here in order to continue in the bullish direction. So short term pound dollar could be sideways, and in case I'm going to apply fib extension in the downward direction, starting from the highest point, first low and joining with the lower high. The magnetic levels are here, so this is a strong level, 1.2955, and I'll be expecting it to form a base here. The next one is around 1.2908. So any opportunity where we get the dip and pound dollar reaches 1.2976, 2955 or 2908 should be taken as an opportunity to buy. It is going to be a perfect retest of the long-term rising trend line here, and then continuation in the bullish direction. Alternatively, if the sellers they fail to push pound dollar towards these corrective zones, magnetic zones, then look for the breach of this falling trend line, a retest and continuation. So this is the plan for pound dollar. It remains bullish. Now the next instrument is Nasdaq, and here I've drawn again the rising trend lines starting from the weekly or in fact the monthly frame. Now on the basis of weekly chart, this is the blue line is the long-term rising trend line which is formed on the monthly chart. Now the next rising trend line I've applied by joining the latest turning points in the bullish direction, and if you notice the breach here, give me a second. Yeah, so I want to explain when I've connected a new rising trend line from this turning point to the next one. Now this is the point from where the highest point was formed and the breach is done. So the sellers, they have taken the price lower than this trend line. Apart from that, there is also a falling trend line which is creating resistance here. So I've joined the high and the lower high, and currently Nasdaq has just managed to breach this falling trend line, but there is an important horizontal resistance level which is around 19,625 to 19,650. Now we have a pattern of low and higher low, but we need to see a new higher high in order to validate the bullish pattern, which could be done by breaching this trend line, the falling trend line, retesting it and continuation. But there is a very high probability that if the buyers fail to breach 19650, I'm going to move to lower time frame. See here, there is a very high probability that if buyers they fail to breach 19650, the major horizontal resistance level, then there should be one more push in the downward direction. Looking at MACD histogram, I can see some containing divergence being formed, which means the buyers are exhausted at the moment. So we are very close to an important resistance now. Apart from that, on the lower time frame, that is early chart, I can see higher high pattern, but again MACD lines are falling down and the histogram is bearish. So I don't see that buyers are very strong at the moment. They might retest 19650, form a bearish divergence, and then the drop may start. So trade cautiously. 19650 is the level to look for in case the buyers are strong and we get the interest rate announcement and the market cheers it, and most of the stock investors, if they find it interesting, then 19650 should be broken and the buyer should hold it. 19650 should be retested as support. Otherwise, there should be some short selling coming from this level. And finally, I'm moving to gold now. Now, again, I'll be going to the weekly frame. In fact, I'll start from monthly here. And same thing, I have drawn from 2015 low, that is the price level of 1050. I've connected the rising trend line and I've connected with the latest bullish turning point. So we got a long-term rising trend line, this one. I'm just going to make it thicker. So here, the thick blue line is the long-term rising trend line. Then after that, I've connected from the touch point, the new bullish turning point. So we got another rising trend line here, this one. And finally, I'm going to now weekly time frame. And I have drawn another rising trend line starting from the latest touch, connecting to the latest bullish turning point, and the price is still above. So monthly rising trend line is intact, weekly rising trend line is intact. Now let's move to daily. Now on the daily frame, I'm just going to delete all the fib levels here, the fib markings. Okay, so what I've done now on the daily frame, I've taken the latest touch point on the previous rising trend line. So the latest touch point is here, and I've joined it with the new bullish turning point. So we are above the latest rising trend line as well. So gold remains bullish on the basis of rising trend lines. The divergence is not seen. In fact, I can see good bullish momentum here. Finally, I'm going to 4-hourly chart. Now on the 4-hourly chart, if I draw a new rising trend line, then the latest touch point is here, and the new rising trend line is going to be very, very steep, so which does not make sense. Sharp or steep trend lines, okay, they are usually broken easily. Now, any which ways, I'm going to connect the latest touch point with the latest bullish turning point here. So the last one, the light blue colored rising trend line coming on 1-hourly chart. So I can see that the buyers have exhausted with some divergence being formed on an hourly chart, and the latest rising trend line is now breached. So there could be some short-term selling. Again, I'm saying short-term because all higher time frames, they're still holding above the rising trend lines, and there is no damage, no bearish divergence as of now. Moving to 15 minutes, same story. The latest rising trend line, the light blue colored, is breached, and there could be some sideways price action before the Federal Reserve announcement, or there could be some shallow pullback, but not a major damage. Now, I want to go back one more time to dollar index. Now, on the basis of dollar index chart, again going back to weekly chart, I'm expecting dollar index can continue downward. At least from the current price level, it can go to $100 mark. So there is a probability of minimum 0.77% drop. This is minimum. That could be rounded off to 0.8, and further if it continues to 98.5 zone, then from the current price dollar index can drop another 2.3%. Now I'm going to apply 0.77 or rounding off to 0.8 the rise in terms of percentage on the gold chart. So when I'm applying with the help of price range tool from the current price, I'm checking the rise of 0.79 or 77. Let's 79. So the exact level is coming at the psychological mark of 2600. So 2600 is the minimum target I'm looking for, and let's hope gold reaches 2600. The pattern is still bullish. Now I'm going to apply fib extension starting on the weekly frame, which I've done multiple times in all my previous weekly videos. So going for the first extension, let's make it green this time. So if I'm applying fib extension on the weekly frame, the next target is 2593 on the basis of percentage rise calculation directly taken from dollar index, because they both are inversely correlated, and I can see 2600. So the target in mind is 2593 to 2600. Now moving down to daily and applying fib extension one more time on the daily graph, starting from the lowest So here we go. On the daily chart, I've applied one more fib extension. So the interesting level for support is 2525, and the next level in sight is 2595 to 2600. Currently, gold stopped around 2580, which is again an important fib resistance level. Now let's move down to 4-hourly chart, and on the basis of 4-hourly chart, I'm going to use 4-hourly pattern to apply new fib extensions. Let's make it blue this time. So the blue lines are the 4-hourly support and resistance lines. An important level of support is around 2569. So we can expect buyers to come back around 2569, followed by 2554. So any dip towards 2569 followed by 2554 should be taken as an opportunity to buy with the target of 2600. And the most important support is around 2525. So this is the plan for gold, and I wish you all a very, very profitable trading week ahead. If you like my video, if it adds some value to your trading plan, show your support and give a thumbs up. Have a nice day. Take care. Bye-bye.